The pandemic's turned the property market upside down. First National Bank now says that if your home is worth 1.2 million rand or less, you're in luck, as prices have shot up at a record rate, meaning that selling in the future looks even more promising. To take us through the numbers, FNB's Senior Economist Siphamandla Mkhwanazi joins us from Johannesburg. Siphamandla, thanks a lot for your time. So help us understand what this property market looks like. Cheaper houses now worth more? What's going on?
Right. Good morning, Tifum, and good morning to your listener. Thanks for having me. Look, so if we think back to what happened in 2020, about above 2 million jobs lost, a lot of us thought that the property market was going to tank. That wasn't to be the case. This is partly because of the aggressive interest rate cuts that supported the market, but also some willingness from financiers, from lenders, to restructure loans, to offer those payment holidays. So the market was supported. Now, what then happened is we then started to see demand rising in the second half of 2020 and into 2021. Now, it came in two waves, this rebound in demand. The first wave of demand was largely driven by, the younger guys, younger than 35, buying property for the first time. So they were moving from renting to home ownership. You would have seen that the rental market was actually struggling during the pandemic, whereas the home buying market was benefiting from this demand that was moving from renting to buying. Now, a lot of this was concentrated in, the buying ranges of between 1 million and 1.8 million. So that's where we saw a lot of this demand coming through. And as a result of that, we saw house prices in that range, rising at a faster pace. In the lower end of the market, however, because there is a structural deficit of the supply of new property, so new build property is usually built in the middle to the higher end of the market. So you structurally have a deficit of new build property in the lower end of the market. So the increase in demand, the lower interest rate combined with that deficit of supply supported the lower end of the market much more, and as a result, we are seeing property in the lower end of the market growing at a much faster pace compared to property in the higher end of the market.
If you've got a property in that lower band of the market, do you hold or do you sell right now?
That one is always a difficult one to answer, because you need to look into the future. So at the moment, we expect that interest rates are going to start normalizing. So this kind of demand we saw in the second half of last year and into the first part of this year is now starting to moderate. So and property prices, the pace at which property prices are rising is now also starting to moderate. So round about now, if you do want to sell, it's probably the best time to start thinking about selling. But also, you need also to look at what is happening in the labor market. We are unfortunately starting to see the reversal of some of the gains we made in the second half of last year. So job losses are continuing. So demand is going to continue feeling under pressure, especially when interest rates start turning. So if you do want to sell, probably round about now is the time.
All right. Listen, we're going to have to cut this short. There were still a few other things we wanted to touch on, but we've run out of time. Siphamandla Mkhwanazi, thank you for joining us. He's the FNB Senior Economist, talking about the growth in the prices and the lower end of the property market.